Good morning and welcome to Bazaar Morning Call. I am Anuj. With me today, Nigel and Rima. And of course, it's the weekend and the more than one reasons for today to be happy, right? Of course, it's weekend and the markets have been good. And after many weeks, the bulls would really be enjoying the weekend. The market over the last 3 months has been in such a strong bear grip that every recovery was sort of looked at with some suspicion, but finally we have a decent recovery. This week the Nifty is up 2.5%, the mid cap is up 3.7%, but from the recent lows this is now a good enough rally. On the Nifty about 6% and on the mid cap index about 10%, which is the heartening part of this rally, that this has been broad based, unlike the past rallies which have been more of index management. There are only a couple of negative cues though this morning. The dollar index remains sticky at 107 and Brent has also inched up. So the big question is this rally which has resumed in commodities, will it derail the Indian stock market rally? That's something I'll keep an eye on. For starters, the SGX Nifty is indicating no such trouble. It's up about 132 points. Nigel, Rima, hi, morning.
Hi Anuj, good morning. Hi Nigel, good morning. Now the question is, how much more from here?
Yeah.
As you said, the Nifty has recovered 6% from its recent low. The mid-cap index has recovered close to about 10%. We seem to have unwound a lot of the short positions, the pessimism in the market which was prevalent, say, maybe perhaps exactly a month ago, right? US markets today have given us a good handover. The key indices were up 1.5% to 2%. S&P 500 closing in the green for the fourth day in a row. The question is, how much more headroom from here? Does the Nifty have more staying power?
That's a tough one, Rima, always. Look, I'm someone who always believes in respecting what the market is doing instead of preempting any move. And if you do that, you make money in this market, as simple as that. Now, let's look at the data first. There's been quite a bit of unwinding of short positions from FIIs. 14,400 shorts were covered yesterday. So that long short from on index futures, that short exposure has now come down to 75% versus a peak of around 88% or thereabout. But it's still a heavily short market, right? 75% is still short. And there are still a lot of disbelievers in this rally. So maybe the market keeps surprising. All you have to do is keep trailing your stop loss to perhaps previous day's low if you're long. The ease with which the Nifty moved past first the 20-day moving average and yesterday the 50-day moving average is telling you that perhaps this is a market which wants to surprise you. And what could that surprise be? If there's a mean reversion trade. The mean reversion trade normally ends at the 200-day moving average. And the 200-day moving average is at 17,100. So I'm not saying that you go there straight away. But is this a market which is in a mood to make a move there? I think that for me is the big question. And for that, keep an eye on the NASDAQ because that's the leading indicator. But aside of what's happening to the index, the market's message for last many days has been the big change in leadership. I mean, if you look at what's happened this month, for example, the Nifty is up 2.2%, the Bank Nifty is up 4.5%, and the IT index is up only 1.2%. Now, this happens normally in a rising interest rate environment where there was a bit of a valuation reset for IT and banks, which is something that we have seen. The other point of this equation is what's happening to the commodities. And that is where the auto index is up 3.5%, the FMCG index is up 8%. And look at Nifty Energy, a large part of that is because of Reliance, but Nifty Energy is down about 4%. Now, this was one trade which was, of course, suggested by S. Narain 2 months back, that commodity users perhaps would now outperform and commodity producers would go through a bit of a decline. So, the sell commodity, buy users of commodities has seen a big trade. Can it continue? I think that's the big question. And in that, yesterday's news from China and the metal uptick that you saw yesterday, that becomes important because while just in the near term, it's a bit of a risk on and everything does well. Like you've seen, crude has done well, metal prices have done well, stocks have done well. But our rally was happening in terms of domestic sectors because of this decline in commodities. So in that sense, I think this is where the medium-term trend becomes very important to track. We need to see if this follow-through of this stimulus news from China. Was this, metals was a bombed out sector, so any news and they were short covering. But will these stocks start a rally again or no? I think that will have a large bearing on where the Indian market goes from here. And really, the big question is, what is the biggest risk? A lot of people say inflation is the big risk. Other people say recession is the big risk. We don't know how Fed will move post July, August. So that's, I think, the big question that will get answered. But if you're a trader, forget all of this. just focus on what the market is doing and just focus on your listed bond on a daily basis. Nigel, hi.
Well, morning Anuj, morning Reema. It's going to be a little tricky, I think, Anuj, today because the SGX Nifty has been moving up. If we get that 150-point gap up, it's going to be very tricky because the Nifty could face the first level of resistance at around that 16,300 odd. So maybe, that if we get a 150-point gap up, maybe buying on a dip could be a wiser idea. But focusing on the short positioning and the way the FIs, they have covered their short position just in 3 trading sessions, the total number of shorts that they've covered is 34,000 contracts. And the long addition is close to around 14,000 contracts. Remember that 14,000 contracts came on a base of around 23,000 contracts. So more than 50% jump in the overall long positioning is what we have seen. And as Anuj mentioned, the Nifty Bank, that's been the dream for the bulls. It's been a relative outperformer for this month itself. But now it's make or break, I think, for the Nifty Bank. That's because it's running into a couple of technical hurdles. Yesterday, the 35,500 call, extremely active in trade. Big open interest build up. In fact, the open interest was up close to around 3 times odd. And the premiums are around 170 rupees. The resistance zone is around this 35,500 odd. And I say that because the highest open interest, is at around that 35,000 mark and 35,000 call. The premium out there is around 360 rupees approximately. So that's why this level is going to be extremely crucial because those call riders, they'll be trying to put in a bit of a fight. So we'll be opening up closer to around the 100 DMA. If the SGX Nifty is going to be opening 150 points gap up, then I think we'll be opening closer to around the 100 DMA on the Nifty Bank, which becomes a very, very crucial resistance level. And at some point of time, the Nifty Bank is going to say, I can't do this alone. So the IT index, the IT commentary as well as earnings is going to be very important. And Brent crude prices, a little naughty boy overnight. That was up close to around 4.5%. That's another key monitorable that you should be looking at. And since the IT index has been a relative underperformer till in this month, it's up only around 1%. Well, it's going to be extremely crucial that it at least doesn't fall apart. So IT commentary becomes important. SGX Nifty, 150 points higher. Wow. What a move we have seen in the last few days. Reema.
Well, the rest of the Asian markets are also firm. Hang Seng is up close to about 0.5%. The Korean markets are up close to about 1%. But one of the big cues is going to be the dollar index. As Anuj pointed out, the dollar index is at a level of 107. It's up nearly 12% since the start of the year. Part of it is perhaps because of the shakeout that we had in UK. The pound hit its lowest level since March of 2020. But the euro dollar is now close to achieving parity. It's at 102. And the last time we had euro dollar at parity was in December of 2002. A major focus is going to be what the Fed is going to do in its July meeting, which is scheduled on the 26th and 27th of this month. Is it going to be a 50 basis or a 70 basis points rate hike? And all eyes will be on the CPI print, which comes out next week in the United States. But yesterday, we had 2 Fed governors. One of them is Christopher Waller and the other one is James Bullard, and both of them signaled a 75 basis points rate hike. What will the street watch today? The US jobs data is going to come out. Secondly, TCS earnings post-market hours. And of course, not to forget, on the weekend, you've got the Wimbledon as well. Who are you cheering, right?
Rafa is out, unfortunately. Yes. So for me, it's practically over the Wimbledon. But I think, I'll cheer for Nick Kyrgios. Even though, he's the bad boy of tennis. I think sometimes bad boys are the good boys. I think someone needs to break the stranglehold of the top 3. I wouldn't have said that if Nadal was in the final, obviously. But now that he's out.
Your bias is well known.
Now that he's out, so I have to cheer for someone, right? I don't see.
You don't want to cheer for Nadal's nemesis, that's Djokovic.
I don't see Cameron Norrie beating Djokovic. So I think if Kyrgios gets his A game on Sunday, if Kyrgios gets his A game, by the way, he can beat anyone on any surface.
Yeah. Do you have a favorite?
Yeah, I think I'll go with Anuj, because Djokovic, let's have a new, and I like he's damn naughty. If you saw the press conference as well, one of those press conference, he asked the reporter, were you the one at the bar? And instead of him getting nervous, she got all nervous. So I'll go with that. But otherwise, I was bracing myself for a thriller. Nadal versus Djokovic. Wow, that would have been amazing.
It would have broken all the records of viewership, but unfortunately not to be.
All right, that's for the weekend, guys. For now, let's talk about the equities and get in some opinion from seasoned investors. Christopher Wood of Jefferies says the new investment quarter has begun with the markets acting like talk of return to the 1970s. Greed and fear refers to the further sell-off seen in oil and related commodity complex. Brent price has declined by 13% since Monday, while the Bloomberg Commodity Spot Index has fallen 21% from the record high reached in early June. The obvious theme is demand destruction in a slowing global economy. Still, in Greed and Fear's view, it looks technical in the sense of the selling of the sector energy, which had been an outperforming sector. Greed and Fear also continues to believe that the return to the 1970s theme has legs, with key issues in markets remaining whether the Fed language changes in the second half of the year.
Okay, let's get you some money market views as well then. And we have Bhaskar Panda of HDFC Bank who's saying that the dollar index is strong. The oil, crude oil that is above $100 a barrel, and the Russia-Ukraine war has continued. So there's a possibility of a risk rally in Asia. In India, the RBI took various measures to tame the USD-INR fall. The impact was felt in the first part of the day. However, the pairs soon adjusted to prevailing fundamentals. He expects trade in an intraday range of 79.15 to 79.35 for today. And I think I'll just add a point here. Today is Friday, so that's a weekly options expiry on the dollar rupee, which happens at 12:30. And normally on such days, you see two-part moves, one till 12:30, and the real move happens post 12:30. So we'll keep an eye on that as well.
On the bonds then, Bhaskar Panda says the Indian bond yields have started to rally after the current slide, and the rally will be more orderly from here. He expects the 10-year benchmark bond yield to trade in a range of 7.35 to 7.4% for the day today.
All right, well, our research team is standing by with CNBC TV.